Hello everyone. Today we are going to talk about something that's very important in accounting and finance, bank reconciliation, which is also known as the detective of your finances. If you ever wondered why your bank balance doesn't match your records, this video will make everything clear. So let's get started. So what exactly is bank reconciliation? Bank reconciliation is the process of comparing two financial records, your cash book and your bank statement. Your cash book is your internal record of your transactions, and the bank statement, which is provided by your bank. The goal is simple: make sure both balances match and identify any differences. So, why is bank reconciliation important? Bank reconciliation helps you to detect errors in your records, prevent fraud or unauthorized transactions, ensure accurate financial statements, track missing and delayed payments, and maintain control over your cash flows. In short, it keeps your finances clean, accurate, and secure. So, what are the causes of differences? Why don't the balances match sometimes? So, here are most common reasons due to which balances doesn't match sometimes. The most common one is outstanding checks. The checks which are issued but not yet cleared, deposits in transit, which are recorded but not yet received by the bank, and bank charges, the fee deducted by the bank, interest credited, which is added by the bank but not yet recorded, and also recording errors like simple mistakes in data entry or double entries. These differences are normal, and that's exactly why reconciliation is needed. So, if we talk about steps in bank reconciliation, there are several steps. Let's go one by one. So, the first step is to compare records. Gather your cash book and the bank statement. The second step would be tick matching entries, which is mark transactions that appear in both. The third step is to identify the differences, like find unmatched items. And number four is adjust your cash book. Update for changes, interests, or errors. And the fifth step is to prepare reconciliation statement. And the last step would be to calculate the final balance. Both records should now match. It's simple, systematic, and very effective way to know any discrepancies in your record. So, so the key takeaways from the whole lecture are we are summarizing those key points. So the bank reconciliation ensures accuracy. It helps maintain financial control. It should be done regularly, ideally every month. It reduces the risks of error and fraud. Think of it as a routine health check for your finances. So that's it. Now you understand how bank reconciliation works and why it is important. If you found this video helpful, like this video, comment if you have any suggestion or question, and subscribe for more easy counting lessons. Thank you for watching. See you in the next lesson.